To find out how long this rally will continue and to create a mental framework, we will look at three indicators, a mix of technical, quant and fundamental. The first is a technical chart pattern. The Nifty scaled its previous high of 18,600, which it touched in October 2021. And after forming a cup and handle pattern, as per technical analysis, it tried to break this level in November 22, but declined after a false breakout. It then broke this level last month and scaled higher, settling at a new all-time high. The depth of the cup was about 22%, and as in a cup and handle technical pattern, once the breakout is confirmed, it is likely to scale to this height, which corresponds to 22,800 on the Nifty. While one cannot predict the time it takes to reach this technical target, we can use them as a mental framework to decide when to make additional investments. In the interim, prices may correct further and can take support at 18,600 before bouncing back, or can correct up to 16,850 before bouncing back. If it falls below this level, then the current cup and handle pattern will be invalidated. So how do you crash proof your investment portfolio? Just as a car resists a crash based on its design, a portfolio can be designed to withstand a decline based on its design. With your risk score and the kind of investor, conservative or aggressive you are, your portfolio design will have varying asset mix to cushion a fall. Second metric, if you scan the number of stocks that are quoting about 200-day average price, referred to as the 200 SMA, there are about 380 stocks as of 20th July. That's a peak of a cycle. If you look at the bottom of a cycle, only about 150 stocks are above their long-term average price. So when 80% of the stocks are above 200-day moving average, we could consider that we are close to a peak. However, markets can be irrationally high for a long period of time. And when 70 to 80% stocks are below their 200-day moving average, we can consider this to be close to a bottom. Remember, these are probability measures to increase our win chances, to be directionally right than to be diagonally opposite. Look at the mutual fund sitting on a huge pile of cash, waiting for a correction to enter. What do you think will happen when the markets decline with so much money sitting in the sidelines? The third metric is a fundamental valuation indicator. As you see today, our index is in the middle zone from a long time horizon perspective. We reach the peak of a cycle when the valuation is in a red zone. This is when the probability of downside is higher than the upside, and this is a good time to sell and book some profit. When the index is in a green zone, the probability of upside is more, and this is the time to be very aggressively investing in equity. Today, we are in the yellow or neutral zone, and the best approach for investors with long time horizon is that of a staggered investing with focus on asset allocation and active management. So what should one derive from all these three indicators? There is a well-known adage in the market: you can't run with the hares and hunt with the hound. Opposing views causes friction. Mutual funds are doing that today. They are trying to time the market. Look at the amount of cash pile that they are sitting with, waiting for a correction. In this situation, there is fear of missing out, and any correction can be bought in very vigorously. Either you're long in there, or you're doubting and waiting for a correction. You need to have a plan based on your temperament and then simply stick with it. There are many stocks and sectors which are still undervalued. For example, HDFC Bank has given flat returns, which is zero returns, in the last 2.5 years, although the profits have increased 50% in the same time. Similarly, Kotak Bank has given flat return for the past 3 years, while their profits have increased 40% in this period. So there are still many stocks and sectors that have not participated that can push the next rally higher. Finally, investing is about personal choices. If you like this content, please consider liking and subscribing to this channel and share it with your friends.